Hello and welcome to a very special London South East investor webinar, a live one-to-one with the Greatland Gold CEO, Shaun Day. For those of you who don't know me, I am Donald Leggett, Head of Investor Relations at London South East, and I'm your host today. Greatland Gold, I think it's fair to say, are pretty unique. They have a huge retail investor following and are one of the most watched companies on London South East. In January, Greatland had 6,348 chat posts and almost 85,000 page views. And in February, 5,803 chat posts and 821,000 page views on the LEC website, which regularly puts Greatland amongst the top 10 most followed stocks. I'm sure you're not surprised to hear this. Our chat boards provide a useful link between companies and investors. So why not get on the Greatland Gold chat board after the webinar and share what you've learned? There's lots to talk about today. I'm absolutely sure of that. The plan for this morning is that Shaun will talk to slides for about 20 minutes. And as you know, the interim results were released this morning. It was news to me, but they're with us. So we've got plenty to talk about, and we've got 20 minutes allocated to questions. No doubt some of them are related to the interims thereafter. I'd just like to welcome Shaun to London now. Welcome, Shaun.
Hi, Donald. It's splendid to be here in London, and I appreciate LSE hosting the webinar today. And then,
it truly is our pleasure, Shaun, and we're delighted and grateful to have you.
And then we'll get together with some shareholders after this, which will also be hopefully a great event. So, look, this is an updated presentation. It has a few new slides in it, mostly around that updated resource and reserve information. So what I'll try to do is leave as much time for questions. So we might just really kind of punch through the key new slides for shareholders and get into that Q&A, which I think everyone thoroughly enjoys, including me. So with that, what I do want to do though is to start with the orientation around our strategy. I think it's good to start and just reiterate this. There's three pillars to our strategy. Continue to deliver and expanding and growing Havieron, and that's a huge focus for the team, and together with our joint venture partner Newcrest. We want to continue to accelerate exploration outside of Havieron. We think the option value in the portfolio is really significant, and steps that we can do to bring forward and create that option value, I think, are worthwhile pursuing. And then finally, we want to consider opportunistic growth. I certainly have a background in value creative, financially disciplined transactions. I think we have a tremendous platform in Greatland. And again, I'd like to think that the journey we go on as shareholders will be to grow this platform to a multi-billion-dollar platform. So in terms of Havieron itself, it's a really unique opportunity. We have this world-class ore body sitting in the Paterson district of Western Australia. That's a tier 1 jurisdiction, and we're able to leverage the existing infrastructure of our global major, with the Newcrest Telfer mine being just 45 kilometres down the road. And all this delivers this low risk, low capex pathway to production. And I think that's what's just so unique about this, is not only have we found an ore body that is really stunning, but to find it in a tier 1 jurisdiction next to infrastructure, and then to have a global major as our partner, really speaks to the quality of Havieron and the opportunity to put this into production on this expedited, low risk, low capex profile. So the next slide is a new slide, and this is really showing the updated ore reserve. And I think if people cast their minds back to what this looked like before, you had a tailoring in of the ore body. But that was not a function of the actual mineralization. It was a function of where we'd done drilling. And as we continue to drill, we've been able to add more reserves, bring that into a mine plan, and then update that resource and reserve. This is really a focus on the high grade aspects of Greatland. So we have a 3 gram ore reserve plus 0.4 copper. So that's a really high grade. And again, all this is dovetailed into how we're developing it. We're developing it perfectly for Greatland in terms of we are driving in to the high grade southeast crescent. We're then going to take that ore through the Telfer mill and generate cash flow, which we then can reinvest into the asset to develop the much broader Havieron story, which is just tailor-made for a mid-cap balance sheet. To do this in stages and to focus on the high-grade material from the outset. So in terms of the resource and reserve conversion, again, these 2 charts on my right hand screen really shows you the growth, and as you can see, that is an exceptional amount of growth from just 10 months of drilling. So this is drilling from about the 5th of February 2021 to the 5th of December 2021. So in just 10 months, this ore body's just lit up like a Christmas tree. And that just talks to the grade, and it talks to the quality of the asset. And there's a couple of really important elements to focus on here. Firstly, you get a gold equivalent, 3.7 grams, but perhaps across 2.9 million ounces. But perhaps the most exciting thing for this is the conversion from resource to reserves at 86%. That is stunning. And what it's telling you is this high-grade material sitting just off the decline that we're taking down the southeast crescent, that material comes straight into the mine plan. And that 86% conversion ratio is really unique. And I think that talks to the quality of the asset, and it talks to the opportunity that as we continue to infill this ore body, we continue to have the opportunity to have a very high conversion ratio and bring more and more material into the mine plan, which ultimately is what drives your free cash flow. So it's a beautiful set of numbers and talks to the quality of the asset and why we keep emphasizing the quality of this asset. And remember, this is just that southeast crescent. There's the much broader zonation of Havieron all ahead of us, together with growth down the southeast crescent. Now, one of my absolute favorite slides is this vertical ounce profile. Ounces per vertical meter is a wonderful kind of rule of thumb when you're looking at the quality of an underground mine. This is this beautiful sub-vertical ore body, which lends itself to underground mining. Gravity works as your friend, but it's the ounces. And what we're showing here, I thought, it was a really big focus for us before, the ounces per vertical meter back in October 2021. But this new line chart to the right of that, you can just see the expansion. And really across that ore body, it's moved up significantly. You can see up the top where we get more drills punched into it. You've really got significant growth. And then what's really encouraging is previously you saw that cutoff at around 800 meters. But as we've done infill drilling below that, all of that's come into ounces. So this is a tremendous, and all of these ounces are in a 650 meter envelope. So often you see, 2, 3, 4,000 ounces across a multi-kilometre strike length. This is all these ounces sitting inside a 650 metre envelope, meaning the efficiency of the mining, the efficiency of the infrastructure to take out these ounces. For every vertical metre of development and decline you put in there, you're going to get a lot more ounces than you would normally get. And 10,000 ounces per vertical metre is absolutely eye-watering. And again, very few mines globally would have that, and an even smaller number would have that over such a small strike length. And again, I think the takeaway for me on this page is as we continue to punch in that drilling, we think we'll continue this correlation between where we've drilled and where we have ounces. So I will continue to grow this ounces per vertical metre to add ounces to the mine plan, which is exceptional. This is the catalyst for the future, but before we talk about that, it's probably also worthwhile. This is an updated view in plan, so from above into the Havieron ore body, and really everything we've been talking about to date has been that southeast crescent. A beautiful part of the ore body, but when you look at that, it's the highest grade part of the mine. But when you look at the overall volume of that zonation, some 4/5 of this is still ahead of us, together with the growth in the southeast crescent. And what I'm really encouraged by is this joining up of that northern breccia and northwest pod, and you're creating this northern structure of relatively high grade material, not as high grade as the southeast crescent, but good grade material. And then augmenting that is what we see in the that eastern breccia. Now that eastern breccia is exciting because, as some of you will recall, down on the south of that, we've intercepted a 6 gram area. Now we've never hit that kind of grade outside of the southeast crescent, so that's especially over that mining width, over that drill width. We are really interested in that. So that's going to attract the drill bit. Is this an extension of the southeast crescent? Does it enlarge and go down that way, or does the eastern breccia have its own high grade element, which would be tremendous upside? So I think this eastern breccia on its own, it adds to the likelihood of a bulk mine just by bringing in a larger volume, a larger profile of ounces. But if it has this high grade element to it, I think that would just be a tremendous addition. And then look, we think about the catalysts over the course of this year. We have a sustainability report, which I think is really important and reflects the values that we want to focus on. We continue to talk with some potential funders because we want to be fully funded. Together, I've spoken about the opportunity to continue to drill and explore this, and we will continue to focus on that with another 40,000 metres of drilling to come into this ore body. We have the feasibility study towards the end of this year. That bulk mine, I think this slide really shows that opportunity, together with the broader opportunities across the mining lease and indeed into other areas that Greatland owns 100%. And then, of course, the main opportunity for us is to complete this decline and get into first ounces. So that's really exciting. And we're going through this transition period into a producer, but that's a tremendous place to be. So with that, I think there's some other slides here which I think we've covered in previous presentations, and so I'm keen to move to questions in the short term. But perhaps just a final slide to touch on is this updated mine plan, and you can see we now have 6 vertical fronts. The updated mine plan that we put together as Greatland, I think, has had a huge amount of work done by it, and everything was double peer reviewed. We used Stuart Masters off the JORC committee, together with SRK consultants, and around the mine plan and check, and again, review and endorsement by SRK Consulting. But what we also did is we really ran them on the same parameters of the PFS. I think that's a conservative approach. In the longer term, I think we can move the stopes, the vertical stopes on this sub-level open stopes from 50-meter vertical height to 100-meter vertical heights, which makes for a more efficient, lower cost mine. But what was particularly significant about the updated mine plan is for a very modest amount of incremental capex, so just to take it down to open up another 2 vertical fronts, you effectively bring in a really significant amount of reserves, 50% increase. So that takes your mine plan from 2 million tonnes over 7 years to 3 million tonnes over 12 years. So that's just a transformation. And so with that, Donald, I'd be keen to open it up for questions, and hopefully that gives everyone a really good update, particularly around these new aspects of the mine.
Okay, thank you very much indeed, Shaun. That was terrific as ever. We have lots and lots of questions flooding in. Thank you very much, everyone. Just to let you in advance say, sadly, we won't get through all of these because literally there are so many of them. Let me quickly put some structure on this and ask you, Shaun, the interims. What for you were the highlights?
Yeah, look, the interims came out this morning. I think there's really, it's just showing the increasing maturity of the company. I think how we went about them and the quality of the document, I think shows the enhanced capabilities of our organisational structure, but it showed the transition to post PFS, and it showed the benefits of bringing in, or the update of that increased resource and reserve in the subsequent events. So, for me, it really just is a snapshot of this continued additional organisational capacity to provide high quality information and to continue to kind of progress as we transition from explorer to developer and ultimately to mining company with free cash flow.
Okay, there were a couple of interesting things which caught my eye, and they seem to have caught the eye of the investor audience as well. So Mark Skinner asks, why have you agreed to an increase in valuation on the 5% fair value stake, which was something that I certainly noticed?
Yeah, look, since joining, I've effectively inherited that joint venture agreement. Truth be said, I think Havieron is a glittering prize, and I'm a little bit disappointed to sell some more of our primary asset.
Yes, it's tough to give 5% of it away, isn't it?
Yeah, well, look, the good news is that first 65% we did, for all intents and purposes, give that away. For this 5% stake, we actually receive financial compensation. So I think it is a better mechanism than previously applied in the joint venture agreement. A little bit of a disappointing thing for us all is that it's been based on the pre-feasibility study. We are scratching the tip of the iceberg, as I think our shareholders know. But I think what we'll perhaps see is the compounded average growth rate of this asset. If we go back to 2019, where we sold 65% on a $100 million valuation, then we move forward to the PFS in October 2021 of a value of 250 million, which goes up to about 450 million at spot. And then we're going to show the benefits of another 10 months of drilling. So I think what people will be able to see is just this continuous increase in value in the asset. Shame that we're not taking all of that through to maturity, but I think what it will do is just show the trend, that compound average growth rate, and you won't need a lot of imagination to say, what is another 2 years of drilling going to do here? And what will be the impact of bringing in that bulk mine? I think there'll be a lot of interest in it. And I think it will also potentially show a roadmap, which is actually very encouraging.
what was it? What has actually been included in those negotiations? Are you using the PFS study? Are you using the MRE that you put out in March? I mean, what gets included? Presumably, you'd love it to be as much forward-looking as possible.
Correct. So, look, our preference is always to update the resource and reserve with Newcrest for whatever confluence of reasons that didn't happen with Newcrest.
You published it, but perhaps you might have thought they would have published it.
Well, look, they do a global update of the Newcrest universe. You know, some of the discussions we've had with them were very clear that it would be updated. Ultimately, for whatever confluence of reasons, that didn't transpire. But I think where shareholders should actually see the positive in this is that we now have the organizational capacity to do it for ourselves. We've invested in mine planning, we've invested in processing, we've invested in a resource geology. So we're actually able to understand our own asset better than historically, meaning we were able to put together our own resource and reserve. Now, I think actually what we put together was deeply conservative, but consistent with the approach in the PFS. And I think that was the right balance. But I think shareholders should take a great deal of confidence from that, from the augmentation of the team and our determination to advocate for the value of Havieron. And look, we have a good relationship with Newcrest. Yeah, a lot of the reasons we're able to do that is the strength of our relationship with the geology team, with the mining team, with the processing team. I have good connectivity with Sandeep. You know, the relationship is strong there, but ultimately we felt we needed to be advocates of our own value.
Okay. Is there a time frame for these negotiations?
Look, it's a mechanism. The mechanisms like this tend to be a little bit opaque around timetable. So I don't want to set expectations in the market. I think, again, people should have confidence that Greatland will take the time it needs to take to give ourselves every opportunity to maximise and optimise value. Having said that, part of me would like to get this behind us. I think it's part of the transition period. You know, with me coming into the organisation, it's an important milestone. So I'm keen to complete it. But having said that, we will not accelerate anything other than to do it as well and as thoroughly as as possible. Okay. And I have a huge amount of confidence in the process we've run around the update of the resource reserve, the understanding of the valuation, the putting together a team to augment our own internal resources. I think we are well prepared, and I think have run a very good process to protect and understand our value.
Okay, Sandeep Biswas is the CEO of Newcrest. He apologised in the his employees and in the Australian Review quite recently, and said he's sorry for his command and control ways, which I think was code for he's not been the nicest of bosses, and he's going to now have a more collaborative approach. Do you think in your negotiations with Newcrest, you're seeing the old Newcrest or the collaborative approach Newcrest?
Well, look, what we think about and what we focus on is our own culture. I like to think as managing director, I set a really strong culture within the team of encouragement, inclusiveness, diversity, and trying to create a culture that allows people to feel confident putting forward alternative views and testing each other. I think that over my career, I like to think I take away some of the best aspects of culture from Northern Star, from Sakari, from Stract, which are all tremendously successful companies, delivering between 6 times multiple of invested capital up to 12 times multiple invested capital. So that's a tremendous track record. And I think for me, it's taking the strengths of each of those organizations and trying to bring them together. And I think our culture is tremendous. And that gives us the best opportunity to create value for our shareholders.
Okay, fair point. Do you have sight of the same resource studies which Newcrest had? Do they share all the assay results, all the drill results? Does everything get shared out?
Yeah, look, we ultimately, the joint venture needs to provide the information to both participants, to both Newcrest and Greatland. So, yeah, we ultimately share the same set of information, which gives us a common perspective and understanding. So I think that works well. And again, if I would to comment on the way we've evolved, we've gone from an organization that didn't necessarily harvest all that information from Newcrest, was relatively relaxed, that we'd outsourced it, that Newcrest would do it well. And there's merit to that. It's a global major. They can apply tremendous resources. But again, I think what our shareholders should understand is that we have not only greatly increased our internal resources to be able to understand and be a good owner of Havieron, but equally we are so much more engaged with Newcrest and in a respectful and collaborative way. And I think that hopefully creates the best opportunity for Havieron to be successful over time, which is where we have beautiful alignment.
Okay, now this one I didn't notice in the RNS, but Nick Taylor asks, what's the GGP position with regard to the contingent liability from Pacific Trend Resources? If you could please kindly clarify the position, he asks. He asks in a very nice way, so hey.
So look, Pacific Trend was what we bought Havieron off. Tremendous acquisition, needless to say. And again, if I can just maybe pause for a moment to congratulate Callum on having, the conviction to identify this asset and drill it, notwithstanding it was over cover, and the value he's created for shareholders is tremendous, and we should all be super appreciative. So look, the Pacific Trends transaction is an outstanding transaction for us. There is a second tranche of consideration. That's always been the case since the day that was signed. So it's just an issue of timing. Those shares will be issued either at PFS, which is most likely the December quarter this year. That's the guidance. Perhaps earlier when we hit the 75% mark. But really, this is just a timing issue. This was always the case. Is already known by the market and has been a feature of our announcements for some years, presumably. So I think that's probably a storm in a teacup, but that will be something. And again, just a reflection of the increasing maturity of the Havieron asset and the closeout of some of these historic mechanisms.
Okay, Colin Moore asks, please be explicit. So he's heard that we've talked about the 5% valuation, and he's saying, please be explicit. Is the 5% valuation to be calculated exclusively on the PFS and JORC resources upon which that was constructed? Thank you.
No, not exclusively on the PFS. It's the valuation date is effectively 15th of December. And if you would recall, we updated our resource and reserve at the 5th of December. The reason for the 5th of December is that was the date of the last output of assays. So effectively, that was the latest information we had prior to 15th December. So we want to recognise that additional value. And again, people should understand that one of the reasons we took the time, energy and effort to create that resource and reserve was so we could understand value better. Our preference wasn't necessarily or intent wasn't necessarily to announce it, but we always felt it was going to be a very material increase. That proved to be the case, over 50% increase in resource, plus an over 50% increase in reserve. And once you have material information, we have an obligation and indeed a desire to share that with our shareholders. So, we were pleased to share that with our shareholders, and hopefully that gives a really good understanding just of the speed of growth at Havieron.
Is it quite galling for you, though, to know that the exponential growth in both resource and reserve and the momentum that there is, that meters per ounce figure you were quoting earlier? I mean, the stats are just simply, as you described them, I think it was eye-watering. Is it galling for you not to be able to, depend on the future, because the future is going to be so rosy?
Well, look, we participate in that future with the vast majority, at least 25% of our asset.
Can I stop you there? 25% of your asset of the most phenomenal mine, that's going to be worth a lot, isn't it?
Oh, it's a huge value. And this is, again, I think the compound average growth rate that our shareholders will be able to see as each price point. I think it's not so much what that price point is, but the trend. The reason to buy Greatland stock is probably the same this week as it was 2 years ago or 6 months ago, which is you believe that the continued drilling will continue to deliver the kind of intercepts we have to date. And these intercepts, we get a little bit accustomed to 100-meter plus intercepts or 65-meter intercepts at, I think it's an average of about 118 grams. That is world class, and we all run the risk of just seeing them every time we do drill holes, but they are exceptional, and we should all be delighted to be seeing that. And as we continue to do it, if I had one wish on that 5%, it would be that we weren't valuing it in this December. Originally, it was a post definitive feasibility study that would have given us an extra year of value. But I'd like to have pushed it out even more, so it also had to reflect the bulk mine. That's not what the joint venture did, and this is a transition process. But again, what shareholders should understand is we've built a team that can optimize that value. It's not a perfect point in the cycle of development to optimize value, but we can optimize that value at this point in time for shareholders.
Okay, which takes us to the share price. Many people have been talking about the share price, which is always a little bit of a tricky thing to ever ask a managing director, as I understand you are. You're not the CEO, you're the managing director. But share price is off its highs. It was up to 36, 37 pence at one point. It's been a lot lower for a long time. Some people are feeling pain. Some people got in earlier. Other people got in at 20p, 30p. What are the possibilities for those people if they're long-term holders and they're looking to a long-term future? Will the share price get back to its heady highs of those golden days?
Look, it's always, I have to be very measured on talking about share price expectations. I think that 35 type price I think was a couple of weeks around Christmas, straight after the Newcrest joint venture was signed. It came back quite heavily in February before I started. But look, fundamentally, I think what I have confidence in is this is a really high quality asset. Over time will continue to create and demonstrate value, and I think it will reward long-term growth. And I think there's some huge catalysts. I talked about the catalysts before, but getting into free cash flow is clearly a really significant one of them. Seeing the extent of that Southeast Crescent, but also at some point developing that bulk mine. I think that is really taking Havieron to the next level. So I think you have short-term catalysts for growth, but I think you also have medium to long-term catalysts of growth. We are just a growth profile, and that's brilliant. And if we augment that with exploration success outside of Havieron, or we augment that with a financially disciplined transaction, I think they will be really positive signs as well. And people should have confidence that I want to continue to build a team that I can surround myself with, of people with exceptional experience that increase the probability of us being successful. And, that's what I want. I hold shares. I want the share price to go up. And I think putting together the right team of people, there's never guarantees, but I think the higher caliber of people you have around there, the higher the opportunity to unlock value.
Okay, Stuart Hines asks, what are your plans for driving Scallywag this year, given its proximity to Telfer and Havieron? So let's talk Scallywag.
Yeah, look, there's no better place to look for gold copper than where it's already been found. So, so that we'll we'll continue to invest in the drill bit there. For us, we think we can unlock value, option value in our share price by having exploration success. And I think the number one way we could increase value is probably having exploration success on our 100% route. Then we could have a discussion with Newcrest about, well, do we bring this into the Havieron joint venture, or indeed do we develop it ourselves? But I think if we were bringing it into the joint venture, it would give us an opportunity to revisit the JV from first principles. And I think to Greatland and Newcrest, mutual benefits. So it would be a tremendous opportunity for us there.
Have you found anything at Scallywag in the early drills that indicate that you've got something special there, or is you still hoping?
Oh, look, I think we've got some really high quality targets there. We continue to drill. We're pleased with some of the intercepts we have there, but equally, exploration is a slow burn. We'll continue to. We don't go in and pattern drill. We're quite selective. We want to go in there and. Sorry.
I should explain that you're not feeling the best today.
No, that's right. But we the problems with intercontinental travel, but that's all right, Donald.
Yes.
But look, I think we've got lots of reasons to feel buoyant about it. But at the end of the day, it's a matter of translating that optimism and opportunities into defined mineralization. And we also really like our Ernst Giles asset. So, and we've broadened our footprint in the Paterson. So I think we have more opportunities than we previously had.
So say that again. Is it Anstrals?
Sorry?
Give me the name again. Anstrals? Which of your tenements? Was it Anstrals you mentioned?
No, look, we did a transaction with Provence and took some of their assets into our portfolio. We also are active in terms of trying to peg ground because the Australian system is you do have to release some, and some of that we think is relevant to us. And Ernst Giles, I think was maybe the other one I was saying. That's a really high quality key in greenstone where a lot of the West Australian golds are associated with, think the super pit. So to have a underexplored greenstone undercover is, I think one of the best exploration addresses in Western Australia, albeit we're slowly working through a process to get First Nations access, and then we want to get on that site. But notwithstanding, we like the ability to be able to unlock option value within our exploration portfolio. The vast breadth and weight of our activity is focused on Havieron.
Okay, which takes us back to Havieron and the decline. Tibor is asking some basic questions. Where are you with the build of the decline? How deep does it go? Is it possible just to give us some context, please?
Yeah, look, the most challenging part of the decline is the early parts of it. That's because the ground is soft. It's not a competent rock. It's more of a mud and sandstone. So the cuts, it may seem perhaps non-intuitive to think the softer the ground, the slower you go. But the reason for that is the widths of your cuts are much shorter before you have to go in and support the ground. So right now we're still in that early parts. We're just about to, we just about plan to move from stage 1, which is the smallest cuts, into the stage 2, which is 2.5 times larger cuts. And then we move into 4.5 meters, a couple of 100 meters out of that. So with depth, with time and pressure, the ground becomes more competent. And then at some point we get into the country rock, and that's beautiful mining conditions. So it's really just getting through this Permian stage. Newcrest did come out and say they were a bit behind schedule on it. We see that they do. But having said that, they've also guided the market that it could be up to, well, they've guided that it was originally in the first half of financial year 24. It's more likely to be the second half of financial year 24, but we're not talking about a huge change at this stage. And I think once we get into that better ground, there's a lot more that the team can do to apply acceleration. So we're still quietly confident about it, but it's certainly something we continue to watch and measure.
Okay. Bank funding. You previously told us that you weren't keen on equity. It's going to be debt funding. You had some term sheets from the banks. I wonder what's the latest on your conversations with the banks, which are look, $72 million is your share, is that right?
Well, 123. We've got 50 from Newcrest and 123. So that leaves us a gap of 73. Although most likely, given the joint venture provided security to Newcrest on that loan, which is a little bit unusual for joint venture loans, the banks will probably make us deal with that. It would be rare that you would have a secured lender sitting above the bank. So we work through that. I think there is an opportunity to bring in some debt, and again, why can we bank a pre-feasibility study, which is not normally when you bank these in the cycle? Because it's a tier 1 asset, it's in a tier 1 jurisdiction, and our joint venture partner is a major. I think all of those confluences, for the same reason this is an exceptional equity opportunity, actually apply to banks. So I think we're going to achieve something rarely seen in the debt market, which is fund a PFS. So I think, again, that's a credit to the quality of the asset. And I like to think the team we have.
And you were talking about a feasibility study around, what was it, fourth quarter, December time, 2022?
Yeah, look, the December quarter is the planned release. From memory, the PFS was released in about October 2021. I think a rule of thumb would be 12 months later. We'll see where that ends up centering in, but the guidance is the December quarter, and I think, again, it should continue to show growth and progress at the asset.
Yes. How much guidance can you give us on what's going to be in that feasibility study? My last question. It is almost quarter past.
Look, it's a joint venture document, so I think I've got to be measured and and not it's a joint process, but we'd like to see it continue to reflect the ongoing drilling and some of that we've shared. So I'd like to think it largely captures this broader resource and reserve, and to some extent we've put that together in short order, and I think, again, tremendous effort by the team to get that out in a timely manner. But Newcrest now has 9 months to optimize that, which is an absolute eternity. So one would have liked to have think that joint venture study team will have a huge amount of time to really take that and improve it and optimize that mine plan.
Okay, Shaun, that's completely brilliant. Thank you so much for joining us today. It was a super extended Q&A session, so with more than 20 minutes of Q&A there. Well done, and I hope you feel a little bit better, Shaun. I can see you struggling there a little bit. Shaun?
No, I'm all good, Donald. And I appreciate the time and the queries from shareholders. Yeah, it's not great. Flying from from the southern hemisphere to the northern hemisphere, but I'm just really delighted to be here in London, meet some institutional investors, but also meet our shareholder base, and also get to do these kind of discussions at a decent hour rather than the back of my clock. So I think this was a good
a.m. is
time
never
for us
good to be having these discussions. Well, you'll be thrilled to hear that we've had 450 plus people on this live webinar, which is a lot of people coming to hear your words of wisdom, Shaun.
Yeah, look, I really enjoy it. I appreciate the questions. I appreciate people dialing in and the support of our shareholder base. So brilliant. I enjoy it, and looking forward to the next event. So thanks very much, LSE, and of course, thanks very much, Donald.
Yeah, my pleasure. The massive thanks goes to you, I think, Shaun, not to us. We're very grateful to you. We're very grateful to your PR team for hosting us here today in the city. We'll be traveling to the town hall meeting very shortly, and we look forward to seeing you all there. I'd also likely to briefly say thank you to the London South East team. They rarely get thanked. Mike for directing the webinar, Andrew for editing it, as he will be in Bristol. We're very international here. Dave Dano for releasing the video version early this evening. And not forgetting Becky and the bosses, Phil and Dave, for keeping things on track at the conference centre. We shall see them shortly. I've been saving the best until last. A huge thanks again to you, all 450 of you, for being such a great audience, for asking such inspired questions, some of them quite challenging. We're really very grateful for your time, and we look forward to doing it all over again on April the 26th with 4 more great companies. Have a good day and stay well.